Well, good afternoon and welcome to the penultimate webinar in the BCC series of webinars all around the UK's new trading relationship with the EU. This is going to be another fabulous event. So far, we've got incredible feedback, and I am absolutely certain that today's panel will do an equally stellar job. We've got another fabulous panel, which I think reflects the value that we can get from the 53 accredited chambers within the UK and the many, many more who form the Global Business Network. Today, we're talking about one of the many hot issues that bubbles up from the TCA and the UK's decision to leave the EU. But I would say this is certainly one of the top two. We're doing all things value added by looking at VAT. Once one of the simpler, easier to understand taxes, which I think cause slightly fewer palpitations of the heart than others. I think it's fair to say that the last 3 months have proved that that is probably not quite the case anymore. And it is an issue for service providers, for manufacturers, for people who buy and sell goods, e-commerce, etc., etc. And I am sure that we will go through this and cover as much of what is an incredibly complicated and wide-ranging area as possible. I'm going to ask the panel to introduce themselves in a second and just say a little bit of their initial observations. Once we've done that, we will come to a Q&A session. Please do put your questions in the question and answer box. I'll do my best to pick up as many of them as I can and inflict them on the panel. And they will almost invariably come back with superb answers and make me look a bit silly, which is all part of how this should work. Just a couple of health warnings about that. The first one is that this is an incredibly fast-moving area. We will record this and put this on YouTube, but always with the health warning that whilst these answers are, I'm certain, correct today, they may not be tomorrow because the world may have shifted on its axis. But that is part of what makes policy interesting and exciting, I'm sure, albeit that it's probably much more difficult and challenging to be on the receiving end of that. The second one is, whilst we'll do our best to answer the questions as put, as an area that's really fact-specific and relevant to your particular circumstances, if there are areas of dispute or concerns or questions or things that are really precise to your company, we would urge you to take professional advice or maybe speak to one of the chambers of commerce, of course, who have experts who can assist you with this. So whilst we'll make our best efforts to educate, inform and help, we can't always promise to give you exactly the precise answers, and that's actually not what we're here for. Having said that, these conversations tend to be brilliant. I certainly learn a lot, which I think is the main acid test. And turning to today's panel, I have no doubt I will again. So I'm going to come to our first panel member, and that's Ruth, and just ask you, Ruth, to introduce yourselves and maybe just give a couple of your initial observations, please.
Hi there, I'm Ruth Corkin. I'm a director in accountancy firm Hillier, Hopkins LLP. We have a small indirect tax team, and I tend to deal with what I call the twiddly taxes that no one else wants to deal with, so quite a wide remit. Particularly focused on the UK leaving the EU. It's kept me pretty busy. And part of that, we've launched a customs declaration service, so we've been busy doing customs declarations and seeing firsthand just what's happening at the border. From a VAT perspective, most of my clients are trying to get to grips with postponed VAT accounting, something they've not had to really do before, and also making sure that their accounting software is up to speed with doing it. And we're finding that we're having to do registrations in other EU member states that perhaps we haven't had to do before, and get to grips with use and enjoyment as a concept because we haven't really had to do it before. So that's really what I'm finding in just a brief overview.
Fabulous, Ruth. Thank you very much. And from everything we're picking up, those are absolutely the really core issues that businesses are grappling with. So I think it's a perfect time to have this discussion. And moving from Ruth, we also have Frank. Frank, can I ask you just to introduce yourself and give your observations on how things are shifting, evolving and moving, please?
Thank you, James. And I have to say, coming after Ruth, it's always a bit nerve-wracking because Ruth is probably one of the most widely respected experts in the VAT and customs field. So I'm Frank Haskew. I'm the head of tax at the ICAEW. So ultimately, I have responsibility for all taxes. So VAT is, if you like, part of our remit, obviously. And I would just say that Ruth sits on sits on our VAT and duties committee. So if we have any really technical questions, I can vouch for the experts who you've just heard from. So observations, well, I'd certainly concur with I think what you both said and what Ruth just said there. I mean, I think it's fair to say that obviously, the TCA was signed very late and hasn't left much time for people to assimilate and implement it. We saw a huge spike in website traffic in the first couple of weeks of January in relation to the TCA. But it has dropped off a lot since then. So things do seem to be sort of heading back towards normal in terms of our website traffic. And I would also just say that in spite of the fact that it peaked, it was only in those 2 weeks it was higher than what we've been seeing on COVID. So we shouldn't forget that COVID is probably, in our members' minds, still probably most important. So areas of difficulty and concern. Well, obviously, we've seen press reports of customs clearances taking longer and teething troubles. I think it's fair to say that was probably only to be expected. We're seeing quite a lot of concern from members about trading with Northern Ireland under the Northern Ireland protocol. I think Ruth sits on one of the Northern Ireland committees, so she might want to say something about that. And I know there's a trader support service available, but I think it's certainly causing our members still quite a lot of concern. And VAT registration, yes, I mean, we're also hearing obviously quite a lot of registrations, but of course there's the mirror image to registering the EU. A lot of EU businesses now who are and have been selling into the UK now need to register for UK VAT under either the platform or under the new less than £135, or just registering more generally. And of course there's no zero threshold for UK VAT for an overseas trader. So I'd be interested in thoughts on this, but the thing we've been hearing a lot of is serious delays in VAT registrations in the UK. So, a week or two ago, I was hearing a couple of months or more it was probably taking. So, I mean, I'm hoping that's going to start improving, but certainly businesses have been saying that they've been really struggling to get VAT registrations through at the moment. And as Ruth said, postponed accounting, yes, that's also becoming quite an issue. I mean, I think everyone agreed that it was very beneficial from a UK perspective, but there are still, a number of concerns, I think, with it. I'd be interested in maybe Ruth's thoughts on this, but I gather it's still unclear about the ability for agents to access it. So that's one issue there. And apparently there have also been some problems with some of the monthly statements that HMRC are producing, having some errors in them. So that potentially is leading to duplication. The other thing is the mini one-stop shop. We're also seeing an interest in the need to register for EU VAT, UK businesses. Ireland seems to be the place where most people, I think, are ending up at the moment. But if you're providing digital services in the EU, then you need to find a country in the EU and register under the non-union MOS scheme. So we've been seeing quite a bit of that. But from, say, a discussion I had with our own VAT manager, it looks like Ireland seems to be the place that people are tending to be settled on. But I think, again, there's lots of issues coming out of that with things like zero rating of e-books, and as we picked up on earlier there, the use and enjoyment provisions as well. So I think, I mean, and another thing coming down the track is the fact that although the UK from 1st of January 2021 has got its VAT rules in respect of imports and services, the EU is also going to be changing its rules from the 1st of July 2021. Originally that was meant to happen on the 1st of January, but that's been deferred by 6 months. So although we've had a number of changes already, we've got more changes coming up in the pipeline as well. So I think we're seeing obviously things have calmed down, I think it's fair to say, but there's still other issues coming to the fore, and it'll be very interesting really to see how all this pans out, and just also the way the UK potentially might diverge in a number of areas, and even developments such as, last week in the budget we saw the announcement about free ports, and then the following day you saw comments that they weren't going to be very popular with the EU. So I think there's still a lot to play for in this, and the agreement was trade and cooperation, and let's hope that the cooperation is very much in the spirit of the agreement. But I think so far things are certainly starting to shake down from our members' perspective.
Fabulous, thank you. That's really, really helpful, really, really interesting, and really, really insightful. And I think you're absolutely right there, in particular, to stress the need not only for the formal structures around trade, but also cooperation in a sensible way between all members to do what is absolutely in everyone's interests. And I'm sure there are a lot of issues we'll pick up through the subsequent conversation. But I'm just going to turn to the last member of our panel now, Emily, who joins us, well, not quite direct from HMRC, because as ever we're all working virtually, but is the Director for Indirect Tax, and therefore has that slightly different view. So Emily, I'd be really intrigued to hear your views and on how things are going and the direction of travel, and the kind of issues you see bubbling up from your side.
Thanks, James. So yes, I'm Emily Antcliffe, and I'm the Director for Indirect Tax Policy at HMRC. I've actually worked across a number of Whitehall departments, and my constant caveat is I am experienced policymaker and not a tax expert, but having been here 18 months, it's probably getting harder for me to hold that line. So Indirect Tax Directorate in HMRC covers VAT and excise, as well as environmental taxes and the kind of sin taxes, so the soft drinks industry levy and things like that. As you're all aware, these are a really big source of revenue, so they're really important taxes. I mean, VAT alone is forecast to raise 120 billion in 2020-21, and when you put some of the other kind of things in with that, you can see that it's a really significant income for the Exchequer. We also kind of work across a number of different areas. We support the government's net zero work. We're part of kind of work on health and obesity, and we were critical to the COVID-19 response, not just the obvious things like that, but actually it was the indirect tax and VAT policy resource that delivered the Eat Out to Help Out scheme in the summer. Budget was only last week, so really hot off the press. In fact, yes, it was last week. I can't remember what day it was for a moment. So this is always a really big event for us, and there are a number of key tax measures which I'm sure you're all well aware of. So we have the VAT deferral new payment scheme, which is now live, and a way for those who deferred their VAT to register to kind of delay the payment of that VAT back, and to do so over 11 instalments over the next year rather than having to do it all at once. We saw an extension to the reduced rate for tourism and hospitality, and a kind of stepped increase as we come towards the end of that 6-month period. We've heard that the VAT threshold was frozen again, and there were also some freezing of fuel and alcohol duties. So kind of that's very domestic, obviously, but really important to us. So what does post-EU VAT look like? So VAT and also excise were significant considerations in our preparations for leaving the EU. There were some areas that we really focused on that it's probably worth flagging. So one is the VAT on overseas goods. So the removal of LVCR, the low value consignment relief. And we did this to stop the kind of widespread abuse of that system, and to make sure that our UK businesses weren't disadvantaged by competition from VAT-free sales and imports, particularly important as the EU joined the rest of the world. So that's why businesses are now having to register and account for VAT in the UK. We've also done a lot of work with online marketplaces and introduced some changes there to make them liable for kind of being responsible for that VAT collection where EU and other rest of the world businesses sell through those marketplaces. We've also kind of implemented quite a lot about minimising the impacts for the Northern Ireland Protocol. So we're trying to make sure that we keep things as close to they were for stakeholders, and we're kind of updating all the time based on feedback, the guidance around all of that, to make sure that businesses have as much clarity as possible. And I recognise that still can be challenging, and we're continually looking at that. We've already mentioned postponed VAT accounting, which is now available for imports into GB from anywhere in the world, and into NI from anywhere outside the EU. And that means that VAT registered traders can declare and recover import VAT on the same VAT return rather than having to pay it up front and reclaim it later. So what about the kind of future? So the budget set out a really challenging economic picture, but actually supporting businesses and jobs remains at the centre of the government strategy. Tax will inevitably continue to play a really central role in that, kind of paying for public services, but also supporting economic growth. And as HMRC, we stand ready to kind of seize the opportunities that the changes present. So last year, we published a strategy to build a tax system fit for the 21st century. We're looking at the kind of digital future and kind of opportunities to improve customer services while also reducing our own costs. We've kind of had a lot more real-time data, and actually that's enabled us to provide real-time tax support to people during COVID-19, and without that data, that simply wouldn't have been possible. We recognise there's a lot we can do, but modernisation does have to be done carefully and incrementally, and we are always wanting to talk to and hear from stakeholders about what is most helpful to you and what things you would like us to be prioritising. So I'm looking forward to the discussion and hearing people's questions.
Fabulous, thank you, Emily. That's really interesting, and I'm just going to apologise to everyone if you hear a 2-year-old or a 5-year-old in the background. That is the second school run in 3 months going on, so it's getting a wee bit excitable, which is kind of lovely, also a bit nerve-wracking chairing a big webinar, but such is life. We are where we are. Ruth, I'm going to come to you for the first question, if that's okay. And I would just remind everybody, participants, please do put your questions into the box. But this is one of mine, which I think is always a sensible way in. And I think a good starting point is everyone's mentioned postponed VAT accounting, which is something a lot of BROs campaign for. It seems like a sensible way into a new system. But I just wondered if we might get a sense from you. You said that some of your clients are asking questions around it and trying to understand it. What's a really simple way of how to access it and use it? And do you have any kind of top tips for companies trying to think about what they might do to make use of this potentially really valuable easement?
Yeah, I mean, I'll explain a bit why my clients have experienced problems. One of them is that freight agents in particular, but agents in general, aren't selecting the postponed accounting option when they're doing the declarations. So they are still being, generated, they're still being asked for VAT when they import the goods. And they're being told that they have to apply to HMRC for it, which is, the guidance is quite plain. You don't need to apply for it, you can use it. So that's the first hurdle. The second hurdle, and I know Emily's probably aware of this, accessing the statements, the monthly statements, has been a little problematic, I think, for some clients. So some of them have got into some form of eternal loop when trying to apply in the first place. Some of them have got into their account with CDS where they're stored to find there's nothing in there, even though they've known they've imported. And others have found that the statements aren't what they're expecting. Now, some of that may well be input error at the border. There's been an increase in the number of agents coming into the sphere to be able to do the declarations with maybe not enough understanding as to what the VAT implications are. Some of it may just be teething problems with the new system. New systems do have teething problems. There's not a lot we can do about it until we can test it live, I guess. And the other thing is that they fundamentally don't understand postponed VAT accounting. Even though they have essentially done it for donkey's years when they've been doing EU acquisitions. So it's getting your head around that and what boxes it goes onto the VAT return, where it is coded on Sage, Xero, QuickBooks, SAP, whatever. And I think a lot of people didn't really think about it until after Christmas, when all of a sudden the 1st of January is looming large and they've got goods coming in on the 4th or whatever. So once they've got their heads around it, they've been fine. They fully understand it. I did an email to a client just yesterday saying, these are the boxes it's got to go in. You select your tax code that will put them in these boxes. And they came back and said, thank you very much. I think once the statements are sorted, people will get more and more used to it. Now, one of the problems that has been highlighted to me is actually a lot of the accounting systems or even the accounts teams will use a particular exchange rate. It might be Oanda, it might be feeding directly into Xero or whatever. but the one used by HMRC is fundamentally different. So when they're accounting for it, they may account for it at the date of invoice based on the value of the goods and the transport and the insurance that they know, and if they know it, any duty. But when they come to get their statement, it's different, and it's making those accounting adjustments that's really, really difficult, particularly with Making Tax Digital coming on stream and digital links, and they're not entirely sure what they can adjust and what they can't. So I think there may be a piece of work there to try and hold hands with businesses almost to get them through that and see how they can make those adjustments, which are quite fundamental to them. They don't really have any impact for most people on the VAT return because it's straight in and straight out, but it does have an issue for them for their accounting side of things. So I love postponed VAT accounting, and my view is, why wouldn't you use it? Why would you want to pay VAT upfront and have that cash flow issue, and maybe claim it back three months later? And I don't understand quite why the instruction seems to be don't use it. And I have also found that there have been charges for clients for use of deferment accounts for VAT that could have been postponed and not needed to go through a deferment account. And those are quite hefty. They're between 3 and 5%, which is a big expense on top of it. There's also sort of various charges. They're called government supplements. They're called Brexit charges, Brexit supplement, and nobody seems to know really what those are. So I think that really needs to be sort of sorted with your agent before you actually import, so you know what your charges are and what they relate to, because there is no government supplement for bringing your goods in at all. It's not duty, because duty is shown separately. So there seems to be a lot of costs going on to businesses that they're totally not expecting, and they don't know how to account for them.
Got it. Thank you. That makes a huge amount of sense to me. So it sounds like absolutely in principle it works, and for many people it does work. There's a little bit of adjustment. My Christmas Eve was half ruined by the announcement, although, obviously it's very good that we had a deal. I'm not saying that, but a lot of businesses were trying to get their head around the real detailed stuff whilst thinking about cooking the turkey. And also a little bit of the commercial practices maybe don't always align with the rules. We just need to adjust that. And I'm sure you can, I'm sure Frank and Emily can, but I'm not sure I could get my head around the exchange rate adjustment. That sounds incredibly complicated. No, thank you. That's really helpful. And another kind of very basic question, Frank, I'm going to ask this to you if that's okay, is around registering for UK companies registering in the EU, which obviously has to happen in some circumstances, but not all circumstances. Can you just give us a quick kind of nutshell's guide to that, when you might want to do it and things to watch out for? And I suppose always the question is, can I register in one EU country and that works for all, or do I have to register individually within each country?
Okay, thank you for that, James. I mean, as we're seeing, we're seeing a sort of fundamental shift here in the fact that the UK has now effectively got its own VAT system, whereas the EU is obviously continuing with its existing EU VAT system, but without the UK. So, and I think the important thing to remember here as well is that you effectively have, I mean, some people describe this as a cliff edge, but it's more like a ravine, in the sense that we've now gone, having sort of bifurcated the UK from the EU, you've now got to look at both sides. So you've got to consider, so for instance, exports and imports, you have to look at both sides. So if you're importing into the UK, you need to look at it from an EU sort of VAT perspective, and then from a UK VAT perspective. And likewise, if you're exporting from the UK out to the EU, then effectively now you need to look at it clearly from a UK VAT perspective going out, and that obviously would normally be 0 rated, but then you have to consider what happens when you get to the other side, and obviously there could be things like duties involved, subject obviously to the trade and cooperation agreement. But then you have to consider the EU VAT side of it, and effectively you're then into what the EU VAT rules are on importation. So, I mean, I'm sure Ruth would echo that. I think the position can get, it depends on the terms of the the contractual relations you've got in terms of those goods, and whether you're the sort of importer or whether you've got effectively somebody else, for instance, who might be the person who's your principal in terms of the registration. And sorry, my phone's just going there, even though I thought I'd switched it off, so I hope you can't hear that. So, you know, you need to consider that aspect of it, but you are, if you're exporting goods from the UK into the EU, then you are going to need, and I think I'm right in saying this, that there's effectively no threshold in terms of goods. So you're then going to be forced, if you're the sort of main importer, to actually register in the EU for EU VAT.
I think that's someone who's got a really precise question there for you about EU registration. So I'll just give you a second to shut that down, if that's okay. Emily, that flagged up the idea of cooperation in the longer term. Is that a policy, a strategic policy goal you have at HMRC, or is it more about ploughing a kind of UK furrow and then seeing how we link into the rest of the continent?
In terms of the overall policy, I mean, the hope is that we will be able to do lots of things in partnership. The EU is our closest neighbour and we do a lot of trade with them and we'll want to continue to do so. There are continue to be discussions, and I imagine there will always continue to be discussions with the EU about how we do things and the best way to operate and to work together. So whether or not I can say it's, you know, the centre of HMRC strategy, I don't know, and maybe I should. But there is definitely a sense that what we want to do is to be able to operate kind of closely together and to have open dialogue about these things.
No, fabulous, thank you. I think that makes a lot of sense. There's always this balance between finding the opportunities and ensuring cooperation. And I think sometimes, I'm sure you don't, but I always forget about the transitional issues from one state to the other. Whilst we move to the sunlit uplands, what is the process for getting there? And I should also say that, Frank, I'm absolutely going to steal your ravine comment. I think that's wonderful. I talk about cliff edges all the time, but I'm going to have ravine. You might see that in a press release before.
Well, I think the thing is, it's a doubling up, effectively. You know, you can't, it's not just what happens in the UK, it's now what happens when you go to the EU, because the EU is effectively a third country as far as we're concerned, and they're going to apply all the normal rules that they would apply to third country imports. So the UK has joined the rest of the world in that way. So, you know, you can't ignore the fact that every sort of import or export has like two things you need to consider, and potentially a doubling up of you know, the admin costs and burdens. I mean, effectively it's like double probably, because you have to look at both sides.
No, I think that's absolutely right. We are a third country, for better or worse. I'm slightly reminded of my marriage vows, but let's not go.
I think it's just, if I can go, just worth kind of building on Frank's point there. You said something right at the beginning about how, you know, we're recording this and reminding everybody that, you know, this is VAT and it changes all the time. And it's really important that recognising that's the same when you're working with the EU. The rules in the EU will change over time, and therefore it's important that you kind of can stay on top of that so that you understand how to operate in that context, because it won't necessarily be the same in 6 months' time when you export to the EU as it is today.
And I think the most crucial part of all of your movement of goods is know your delivery terms, because that does dictate who's responsible for what. So if you do something on X works, your purchaser is responsible for the export document from the UK, the import document into the EU, the VAT, the duty, etc., etc. The other end of the scale, you've got delivered duty paid, where you as the supplier are responsible for absolutely everything. So by and large, if you're doing anything delivered duty paid, you will be responsible for accounting for VAT, and you may well need to register for VAT at that point. So and in every single member state, there is no single registration at the moment. That's DAC 7, which is in process at the moment at the EU Commission level, and may well come off. But then we did think we were going to get a single VAT return at one point, and with 27 different agenda, it didn't work. So it is really important that you know how you're moving your goods and on what terms, because that really does help dictate what you're supposed to be doing.
Thank you, Ruth, and thank you, Emily. I think that's very sensible, and it does look back to this idea that everything's in the detail, plus it all changes pretty quickly. One of the things that a question that has been asked, which I think is a very good one, And Ruth, I'm going to come to you in order, if that's okay, which is, how do I reclaim import VAT when I'm returning to Germany goods which were faulty? Is there a procedure to follow? Presumably this is, with the best one in the world, you know, subject to the contract terms, arm's length goods do fail to work, do need to be returned. What does one do about VAT in those circumstances?
That is a difficult one. So is this duty, or not duty, import VAT that you've paid in the UK already, or is this import VAT that you might have in Germany? Because that there is a bit of a difference.
Bit of a difference. Well, I think it's the former, but
Okay.
I'm afraid I'm really just reading the question. I'm little more than a mute repeater at this stage.
Well, normally, and this is fairly untested, and it's a long time since I've actually done this. I do remember the rules pre-1992 or 4, or whenever it was. But if you're returning the goods and you've already claimed import VAT, and you're returning the goods, then you should really adjust your VAT to reflect that. If you've ended up with import VAT because you've returned goods in Germany, then your claim is against the German tax authorities under the 13th Directive claim. So most goods, if you want relief from import VAT and duty, you need to have one of the processing reliefs in order to move the goods without, you know, sort of penalty, if you like. And when the goods come back in, if they've been repaired and sent back, you could face import duty again. So you're going to get a ping pong of import VAT and duty if they're non-originating.
Fantastic, thank you very much. And I doubt very much you can remember 1992 with that much detail. I struggle with 2020 at the moment. It feels like it's been that year, but that's superb. Thank you. And Frank, one of the things you mentioned was to do with MOS and the e-commerce services, which is where things get a little bit tricky, and we run into online marketplaces, etc. How is that looking from where you are? Is that something that your contacts keep coming up against? Do you feel they have a sense of it? Are there some top tips we can give out to the audience?
Well, as I say, obviously, you know, the UK used to have a UK MOS scheme, and this obviously is for the provision of digital services, and it you know, it is quite a major simplification. So instead of I mean, as Ruth was alluding to, the need to register in each and every member state, you know, you could just register in one state, and effectively you still have to account for the VAT rate in the country in which the customer resides, but effectively you can put it all on one return. So, you know, that's quite a major simplification, to actually having to register in each and every member state in which you're making supplies of digital services. So obviously that's now the UK's left the EU, that's now gone. But obviously the EU is still operating that scheme, but only in the 27 member states that are still in the EU. And from the UK perspective again, a UK business can operate the EU, or sorry, the non-union MOS scheme effectively. So a non-EU territory can access the scheme by registering in one of the 27 EU member states and using the scheme in that member state. So effectively the UK businesses selling to digital services in that position can operate in a single EU member state under the non-union MOS rules, submit one VAT return, as I say, with all the, you know, all the sales effectively in the EU member states recorded at the relevant rates. So, I mean, I'd be interested in Ruth's perspectives on this, but I think I know there was some concern right at the beginning of all of this about being able to obtain VAT registrations in the EU member states. And I think that was probably also more generally in terms of just making supplies of goods for the reasons we just said. But I think certainly from my understanding is that registrations made in Ireland seem to be working quite well. I believe, I mean, I also heard the Netherlands, I think, is probably being used as well. But I suspect they've had the same the same sort of problems I just alluded to in respect of EU businesses wanting to have a UK VAT registration, that it's probably overloaded their capacity to actually make the registrations. But I think Ireland probably saw an opportunity here, I suspect, and geared up and were ready, being a sort of English-speaking country by and large. So they were probably well geared up for it. I mean, as I understand it, obviously, you're still going to have to, say, record. You're going to have to do it in euros now, obviously, because now we don't have a UK MOS scheme. You can't do it in sterling. So even though you're selling out of the UK, you'd have to register in Ireland. You'd have to make the return in euros. So you have to use it sort of using the relevant translation rate. And as I say, then you'd have to record the VAT in each of the countries in which you make those digital sales. And I mean, I have heard of one example where effectively their decision was that they just charge the price to a digital service in whatever EU country. It's just 20 euros. That's the price. So they're not charging, if you like, individual VAT in the EU country at that stage, and effectively they're then sorting it out, I think, on the VAT MOS return when it's submitted. So, the actual profit you make can vary potentially depending on what the the relevant rate is in each of the individual EU countries, if that makes sense. So, if it was higher, effectively there'll be more of your sort of profit, if you like, taken out by VAT on the return. But that was their decision. So the pricing, it's just effectively the price you pay is the same for everybody, and the VAT is almost adjusted later, effectively. I don't know whether there are other sort of businesses might have different business models which do it differently to that. But I think in terms of simplification, trying to probably charge in your accounting systems different VAT rates across all the EU countries could probably, for a lot of people, just be administratively almost impossible, I would suspect, certainly at the point of sale. Right. Whether you've got...
I was going to say, I mean, I can comment on why Ireland has been so popular, because most of my clients are registered for MOS in Ireland. I mean, that there are a number of reasons. One is the English speaking. Obviously, that makes life a lot easier. But the Dutch, the Polish, the Hungarians, they all speak very, very good English. They all have a shared service culture. But one of the main reasons is because the Irish ROS system is very similar to the HMRC system for actually submitting the returns, registering for it, etc. So it makes that life a whole lot easier than having to get, if you registered for MOS in Poland, you may need a tax representative. You may need to do a SAFT file, which is a complete alien concept to us here in the UK. So Ireland is popular because it is so similar to the UK in terms of how you report and not needing a tax representative and being able to file directly, from a UK web address into the ROS system.
Got it. Fabulous. Thank you. I was actually going to say, I saw you nodding at the Ireland point. I'm going to come to you on that one, but that makes a lot of sense. And I suppose I'm just struck by how many normal businesses doing normal business things are essentially having to think about currency fluctuations and speculation almost in a way that 10 years ago it would only have been incredibly high-end hedge funds and what have you. But maybe that's slightly overplaying it. I'm going to slightly change the direction of travel a wee bit and think more about EU companies getting VAT registrations in the UK. Emily, is that something on your radar? It sounds as if there's been a few delays and a few problems. Is that something HMRC is aware of, and how are the work-throughs coming together? I'm sure you are working through them. It would just be good to get a sense of whether we think this is a temporary problem or actually this is a new fact of doing business.
No, it's definitely a temporary problem, and it's something we are aware with and working very closely with customer service group on kind of what has caused those delays, and that a contingency plan has been in place for a while now to work through that backlog, and it's operational and it's closing it down. So that gap is already coming down, and it should be back to the normal levels. One of the things as well, just worth noting, is that the service level agreement, we've been well under it for a really long time. So actually our rate of VAT registrations has been really fast. And we're not saying we're just going to meet the SLA and yay, we're done. We'd like to get back to that level, but we are working through a process to make sure we get that back to the level and the service that we want to provide to customers. The other thing just to flag as well is that there was also a lot of misconceptions early on that people had to pay to register for VAT with HMRC, and that caused a few problems and delays because people were kind of thought they had to pay, therefore didn't kind of get their applications in. So you don't. There is no charge to register for VAT with HMRC. So I think it's just worth making sure that people are really clear about that as well.
And I was going to say, I had a conversation with the team actually handling those registrations on the part of the International VAT Association. So obviously it's the quite stakeholder for that. And I think there's a lot of things that people put in applications can do that would make life a whole lot easier. One of them is please do it online. Don't do the postal form. It is so much easier online. I don't think I've done a postal application for probably 10 years now, because it is so much easier to do it online. Things like making sure the bank account is in the name of the person applying. That is, because otherwise it gets sifted and has to be looked at, and that's a manual process. So, if you're saying you're intending to trade in the UK, make sure you've got the evidence that you're intending to trade in the UK, because, with the best will in the world, nobody's going to take your word for it that you might just on the off chance be trading. Then making sure you've got your ID. If you're an overseas person authorising that form, you need some ID. So please make sure you've got it. It's all really simple stuff, but each time something like that falls down, it causes a problem at the other end. And I think we all have a responsibility to make sure that we furnish as much information as possible to make that process smooth as well.
I think that's absolutely right. There are responsibilities on all businesses who want to trade to try and abide by these rules as best they can. And they might quite reasonably say there's responsibilities on the BCC to help them understand them, which is, of course, why we're here stealing. Such wonderful insight from all three of you. Ruth, I'm going to ask you a little bit about triangulation now, which is buying goods from a supplier in the EU and having them shipped by that supplier to a customer address in the EU in another country. There is then a customer invoice raised in the UK. Now, a couple of weeks ago, we had one of these around NIGB, and I spent most of it talking about Percy pigs. I don't think we're quite in the Percy pig territory, but it does feel like we're in similar kind of level tier 3 or 4 complexity. So deep breath, cup of tea.
Deep breath. So
the run through, please.
Triangulation was used widely for moving goods around, where you had 3 different EU VAT registrations in 3 different countries as a basic premise. Not every EU member state operated triangulation, but most of them did. And basically, if you were the one in the middle of the triangle, so somebody would place an order on you and you would place an order with another party, and that party would deliver directly to your customer, you were the intermediary supplier, and normally you would need to register either in the supplier country or the recipient's country. But to get around that, triangulation put the responsibility on the recipient to account for the VAT. That is an EU simplification, and we're no longer in the EU, so we cannot, as a UK VAT registered person, use triangulation. So what I'm seeing is a lot of my clients shipping goods into, say, France, it's the first port in the EU. Calais seems to be full of people shipping goods at the moment, registering for VAT there, because France also has postponed VAT accounting. So you don't pay VAT at the docks necessarily, although strictly speaking, you should do a few imports before you can use postponed VAT accounting. And then they're using that French VAT registration number to effect triangulation ongoing. So you can still do it, but you do need an EU VAT registration. Now, there's a further complexity in that some member states don't recognise a non-established VAT registration number in the EU and say you should have an establishment to be able to do triangulation. That will be an interesting development, because it's never been an issue prior to us leaving the EU. It's always been an issue where you've got no VAT registration, and so a lot of US companies used to fall foul of it. But it's it used to be as simple as 3 VAT registrations, 3 different member states. So if you want to use triangulation, if you're regularly going to have stock in the EU, you may want to look at either registering or making sure you've got a fixed establishment with staff or people able to conclude contracts in another EU member state. If you want to do that easily, then the Netherlands is a good one. They've had a tax representative system for an awfully long time. They've been used to dealing with the rest of the world. They're the biggest shipping container port in Europe, so they're used to dealing with it. But really, you need to be moving the goods through the Netherlands in order to be able to use that. So don't think you can have a Netherlands VAT registration or a Netherlands tax representative and still necessarily do it. You've got to actually physically import the goods into the Netherlands. So it takes careful planning, but it can be done. And it may be something that in the negotiations going forward, there's a bit of a relaxation, but there's no precedent for it because Norway doesn't have it, Switzerland doesn't have access to it or anything like that. So it would be a big move by the EU, I think, to allow the UK to do it, even though traditionally we used to.
The only thing I would add on that, for fear of straying into technical territory and getting myself into trouble, is that if you're trading under the Northern Ireland Protocol and you have an XI VAT number, then you can use triangulation. So for businesses registered in Northern Ireland with an XI, then it is possible to still use that process.
Except that Germany won't accept them.
No, at the moment.
Germany has categorically said they won't recognise the XI VAT registration number, which is causing a few issues at the moment.
Yes, I can imagine that is.
So I've got customers registered in Ireland to get around that, so that they've got their an Irish EORI number and VAT number. But there is a degree of confusion with the XI VAT number and the XI EORI number, because when you're doing GB to Northern Ireland, it's still one and the same number, and I think that's part of the issue. Is, you know, people say, well, I've got my XI EORI number, but that's not necessarily an XI VAT number.
Yeah, you do have to have the XI VAT number to be on fees on the web to do the thing.
Yeah, but. And it is quite confusing. Northern Ireland is probably the trickiest bit because it is so far out of our it seems counterintuitive on a lot of what you do with Northern Ireland. We can understand the triangulation and using the simplifications using an XI VAT number, but people don't necessarily understand how you get it, who's entitled to one, etc., because you have to be in Northern Ireland, is my understanding, to get the XI VAT number.
You do.
And just to check, is that physically in Northern Ireland or established in Northern physically? Yeah,
so you've got to have some form of establishment in Northern Ireland.
Oh, well, as we said earlier on, I think off the back of what's been a fabulous conversation so far, VAT used to be one of the simpler taxes. Frank, just coming to you, one of the points that's come up is around PVAs. There seems to be some companies demanding their use, other firms don't want to use them. And if you could just explain a little bit more around how PVAs work. And also the question is, can you use your duty deferment account to pay your import VAT if you choose not to use PVAs? I think it's going to be for you, Frank, but if not, I'm happy for you to throw it to one of the others.
Yeah, I was going to say, I think I might need to throw that one to Ruth, actually, because I'm still gearing up on customs provisions, I'm afraid.
Okay.
I was straying off skip there, Ruth.
Yeah, well.
I'm getting me out of this chair-based hole, please.
Okay, so if you choose not to use postponed VAT accounting, and you are perfectly entitled to not use it, you follow the rules that we used to have before the 31st of December when you used to import from the rest of the world. So you will import your goods, you will be charged VAT at the border. You would normally have to pay that either via your agent or directly to HMRC. Any duty you would pay at that point before the goods would be released. A duty deferment account is different to postponed VAT accounting in that your duty deferment account, yes, if you don't use postponed VAT accounting, you can have the VAT put to your duty deferment account. And then you pay that by direct debit the following month. So you get a maximum, I think it's of 6 weeks before you have to pay it. So it is a useful tool. But there's a lot of confusion, particularly with overseas companies, about postponed VAT accounting and deferments. A lot of agents are insisting that people have a deferment account when they don't necessarily need one. So if they want to use postponed VAT accounting and the goods they're importing are duty free, there is no need for a deferment account. There is no legal requirement to have a deferment account. It's not difficult to get one. If you're a UK taxpayer, established in the UK, you now no longer normally need a guarantee, which makes life a whole lot easier. You can apply for a guarantee waiver. And there's also a lot of sort of confusion as to, oh, it's £10,000 a month, that's all you can have a guarantee waiver for. Actually, no, you can get it for a higher amount. You've just got to provide more information to back up the fact that you can afford to pay it in the same way as you can a mortgage. You may have to have a partial guarantee, but it's not as expensive as having a full guarantee. So it's worth looking at. If you're an overseas established trader, then you will need a customs guarantee, a full one. I can't remember what the CCG as they're called. And I think I'm right in saying you still need a UK bank account in order to pay that direct debit and pay off the liability. So it's not quite so easy if you're not established in the UK or you don't have a UK bank account. But there's no reason why you can't use it. And as I say, agents are routinely, it seems, putting VAT into their deferment account and charging for the use of it. Maybe because there's just so much confusion as to people think postponed VAT accounting and deferment accounts are one and the same thing, and they're not. They have a different purpose.
Fantastic. That is cleared up for me. Thank you. It's very, very handy. And I think that brings us to our last question, which I'm going to ask of Emily before we come to the panel for final minute summaries. And Emily, we've heard a bit about what are called Brexit charges or government charges today. And it seems they have no, well, obviously, one company can charge any other company whatever it likes within reason, but there's no legal need. It feels there's a little bit of misunderstanding about it. And we can understand the situation where companies faced with new rules are told they should do something in a hurry, don't quite read the small print, pay 3 to 5%. That is their profit margin. These are not interesting circumstances. Is there an HMRC view on these, or is this something you're thinking about, or can you clarify to us that these are, whilst they might be a contractual requirement, there's no government necessity for them to be paid or charged, and that may be something our participants want to say when pressed on them? I'm almost leading you to a conclusion here, who knows?
Well, I mean, there are a number of different factors at play. I think one thing is part of it is about changing systems and processes, which means VAT is showing up in a different way, and that can confuse people in itself. So VAT's always been payable on things. Often it was payable in the country of purchase when you had something kind of sent to you. Now that's shifted and there are different ways of paying VAT, and you may be charged import VAT because you weren't charged it on the price of purchase. Actually, the price hasn't changed, and that's kind of one area where we're hearing about I'm being charged more. Actually, you're not. There's just the way that VAT is charged is different. Ruth said right at the beginning, I can't remember the question around kind of look at the terms and conditions that you're trading under. That's another area where if you are supplying a business, kind of they can set the rules about what they would like you to do, and many have changed their requirements since we have left the EU. And again, that is a commercial decision, and this is for you to kind of negotiate with the business you're trading with. Then there is kind of there are other companies, people like, you know, I probably shouldn't name parcel operators, so I won't, but there are parcel operators who will operate in a particular way and will charge either the importer or the exporter different fees to do some of this on their behalf. So many fast parcel operators are now acting in that way, and many have done so for the rest of the world as well. They're now doing it for the EU too, so they are collecting that import VAT, remitting that to HMRC on behalf of the customers. And again, that's another, and will charge for that service. And that charge can be on a number of different people. They may put it on the importer or the exporter, depending on the arrangement. So there are a number of commercial factors at play. And, you know, there are no charges that government is levelling on anybody. The VAT still needs to be paid, and it needs to be paid in the appropriate place, and it needs to come to HMRC. But some of those changes have resulted either in extra charges for commercial decisions, or what can appear like an extra charge because you've never had to pay to have your package released to you before, but actually it's just because previously that VAT was paid in the country of kind of departure, as opposed to you having to pay import VAT when it arrived.
Okay, thank you, Emily. My heart started racing. I thought you were going to say there's no VAT payable anymore, but that's like something HMRC should be saying. Well, look, that's been incredibly interesting and helpful. Thanks to each of you. I'm just going to come for last thoughts to the panel in turn. Frank, do you mind if we start with you on last thoughts?
Yeah.
From an ICAEW perspective, over to you.
Yeah, well, I mean, very quickly, I would say that certainly customs duties in particular, but importing and exporting has never generally been something that most of our members have historically been involved in. But I think we're starting to see that change, and indeed, you know, I'm looking at Ruth there as an ICAEW firm member who are getting very involved in VAT duties, in particular, you know, advice, and also involved, I think, in the documentation, the processing thereof. So I think what we're going to see is a widening of the pool of the traditional suppliers of services in this whole importing exporting area. And we'll probably see a lot of new entrants coming in, I think. But that, you know, that will also mean that they're going to gear up for it and skill up for it. And that's, I think, what we're going to see a lot of over the next couple of years. So definitely a big increase in the number of probably providers of services and advice in this space, and probably from a wider base than has been traditional for almost a generation, I would say.
Fabulous. No, thank you. That's really interesting way of looking forward. It'll be intriguing to see how the market evolves around these shifts. I'm sure there are lots of economists desperately thinking about research grants off the back of that. And Ruth, from your perspective as a very established player and an absolute world authority on VAT, your observations around it, please, would be really fascinating.
But there's a number of sort of strings, I think. I think we are finding it difficult at the moment, but I can see it will settle down. We'll get used to it. It will become second nature. And as people become more and more familiar with the rules and more people are there to help them, then I think it will settle down. Most of my clients are doing 3-stage planning. So they're doing, what do I need to do to keep my supply chain going now, whatever the cost? So they are incurring extra charges. They're swallowing them. It's part of their profit, but it keeps their supply chain going. They're then doing, what can I do to mitigate those costs, you know, quickly and easily without the need to set up here, there and everywhere. And then their third stage, which is probably sort of 12 to 18 months, maybe 2 years, is where can I set up an establishment to make that whole chain a bit easier. And that's on the basis of, let's see what happens, let's see what's negotiated, let's see what changes in that 2-year period. And I think we will see some changes in that time. So there's that. And then the other thing that I'm constantly telling my clients is, don't lose sight of the fact that the EU is still going to change. And if you're trading with them, you're going to need those changes. So on the horizon, as Frank mentioned early on, 1st of July, we've got changes to the e-commerce system. So the supply of other services will now be done through something like a MOS, although it will be called a one-stop shop, or OS. For the low value things, goods coming in, there will be an import one-stop shop. If you've got stock in the EU, you will register for a different version of the one-stop shop. So you need to get your head around those. I think it will make life a lot easier for UK businesses doing distance selling, because at the moment they're having to register here, there and everywhere. They're facing disgruntled clients because there's unexpected duty and VAT charges because of the way the shift of where it's being accounted for. The DAX 7 movement with single registrations and things like that, the EU is constantly changing in the VAT sphere. And so I think businesses do need to keep up. They can't just say, we've left the EU, so it doesn't bother us anymore. It will always impact on us, and you need to be aware that it will do and make the appropriate plans.
No, fabulous. Thank you so much, Ruth. I think that's absolutely right. And thinking about it on those 3 levels seems like a really sensible way to proceed. We'll finally, Emily, over to you for your final observations on VAT post the deal.
Yeah, so I mean, I think there's, you know, we are in a kind of still in a transition period. There are ongoing negotiations and ongoing discussions, and we will continue to be part of that, and VAT and excise will continue to be central to those. We kind of are committed to making things as simple as possible for businesses within the kind of constraints that we have, and that's kind of what HMRC's aims and objectives are. We don't always get it 100% right, but we will keep striving to do that. We are always kind of having consultations, we're open to discussions, and are kind of happy to hear from businesses and from people, the organisations that Frank and Ruth represent, about the things that are not working, so that we can look at what we can do to make things better, to improve our guidance, etc. So it's kind of it is an ongoing process. We also know that kind of as time goes on and things settle down, the government will want to look at what kind of options there are now we have left the EU in terms of kind of VAT, excise, customs, other areas where there may be more flexibility. So it will continue to be changing and evolving, but we will want to do that while listening to businesses, listening to stakeholders, to make sure that we're doing the right things and providing as much clarity and as much certainty as we possibly can.
And the TCA has an awful lot of opportunities for businesses to get involved in all of those sorts of discussions. So I would say, please do get involved, because with all the consultations that go on, and Frank's probably the same as me, you get a consultation and you find that you're probably the only voice within the membership that's actually providing information, or there's only a few voices and it's the same voices, and they're valid. But we do need that breadth of experience to be able to make valued judgments and to be able to be part of that process and not be part of the problem, be part of the solution.
I agree.
I think that's absolutely right. Someone who spent quite a large chunk of their early to mid-20s reading consultation responses and trying to understand what was going on. What you're really looking for when you're making policy is a breadth of experience, a breadth of sense. Because sometimes you're very aware that the loudest voices aren't always necessarily the best plugged in. So I would totally echo that, and that's a principle I've always adopted through my career, and I'm sure Frank and Emily are exactly with you on that, Ruth. And well, look, that's been fabulous. I'm sure we could do this for several more hours, but don't worry, everyone. But I'm afraid we've slightly run out of time. It's been absolutely fascinating. I won't attempt to do a full summary because it's well beyond me. Some of the points I noted down are: look at the terms in the agreement, that will dictate the nature of the relationship. Think about the advantages of deferred VAT accounting, postponed VAT accounting. There may be a little bit of extra paperwork, but my God, there's potentially a huge amount of benefit. Doesn't work for everyone, we're not saying that, but do at least make sure you've taken a sensible decision. Think about the local requirements, the local responsibilities, and how you evidence those for each of those decisions. Not just going to work in the same way as it did before. It might not be as smooth, but actually once you get there, it might work really nicely. And finally, there are lots of sources of excellent advice out there. I'm just going to pick out 4 very briefly. One would be the ICAEW website. It's easy for me to say. The other one would, of course, would be .gov.uk. Third, I would say definitely look at Hillier Hopkins. They are clearly supreme advisors in this space. I hear they have some fabulous partners, Ruth. Finally, of course, I would say this, your accredited Chamber of Commerce is stuffed to the gunwales with trade experts, maybe not quite such precise VAT experts, but I'm sure we'll make a good fist of it and would be very willing to take all your questions. I say that as someone who deals with policy rather than operational questions. So I'm going to say to Frank, to Ruth and to Emily, that has been superb, really interesting, really insightful. I take some positivity from that, albeit there is still a journey to be undergone. Final point from me is just, we have the last in our currently booked series of webinars next week, where we will be thinking, actually based on something that Ruth said as much as anything, about the future of the trading deal, how it might change, how it might evolve, what we're seeing. We might see some changes this week, we certainly did last week, where we have a similarly stellar panel, including our own Director General Adam Marshall and Charles Grant from the EU. Easy for me to say anyway, but we will hopefully continue the excellent work that this panel have done as the others. So to Frank, to Ruth and to Emily, I say thank you once again, and to everybody I say good afternoon. Thank you. Bye-bye.
Bye.
Bye.